The S&Ps are likely to make a high this week and then are likely to come down into mid to late June. Today is June 10th, and our prior forecasts, we were expecting a topping region between the 6th and the 11th of June, and so far that has been unfolding. The market did rally nicely last week, and we do believe it'll go a little bit higher. The momentum balance technique, which I have created, is a very reliable tool, and it projects that the momentum hasn't run out yet. We should go up higher into the 6150 area potentially on the S&P. And then after that, we're expecting a fairly decent break. It's a pullback. It's not a downtrend beginning, but it's a short-term pullback that should shake out some of the longs that have been incredibly ferociously buying this market. It's just a pullback, but it could be a little deeper than most people expect. We're looking for 5,500 as a potential target. And after it's over, we expect to see additional rally, strong rally potentially, into the middle of August. Okay? Now, price-wise, the highest probability patterns, which are validated and referred to because of a mathematical formula that we use, was the 20-year cycle in a little bit less than 20 years ago, a few days less. It's repeating extremely well. And also seasonally and similarly, there are the market 18 years ago, and also the market in 25 years ago. They all have the same pattern. And when you have 3 markets or 4 markets that have very, very similar patterns, it's a fairly high probability will repeat. And they all go down basically for a week or even longer, starting around this week in June. We think that the probabilities are very strong that the rally after that will take us to new highs. And the question is how high? It seems as if, given the 20-year cycle pattern, that it does not go extremely high in August. But if it does break above the 6350 area, there's a pretty good chance we'll go up significantly higher even before then. We also do believe that if the 20-year cycle repeats, and several other of the patterns that are similar, including the 1994 market, which is extremely similar, also has a break in June. They have a high in August, and some of them also have a high in middle September. And then they all go down into the early part of October, possibly fairly sharply. Okay, so the next 6 months or so, we're looking for higher prices, but then kind of a sluggish market starting around August or September and ending in October. At the end of the year, however, we could see an explosion again, taking us up into next year. We're looking at February through April of next year as a potential major top, and that major top would have a bear market after it. We're not thinking the bear market has started yet. We think we have one more quite nice rally coming, and it may not happen yet. Even if we don't break down much in June and go up in August, it's still probably not the big one. But nevertheless, those are the higher probabilities. On the second level, we have the 60-year cycle, which has been in the market for years. It's still there, and it does not have a very big pullback. It's on its way up, and it keeps going. So that's the alternative count. How do we know if that's right? The market will break above the 6,300 area very soon. We will have either a nothing or a minor pullback in June, and we just keep going up into August. That does pull back again into October, by the way. So the first probability, the 20-year cycle is probable likelihood, 60-year cycle second runner-up. The bearish patterns, with the exception of one of them, believe it or not, have very low probabilities. The one that does have a reasonable possible probability is 24 years ago in 2001. But so far, there's no evidence that that will repeat. And even if it does, it basically has the same timing. That one has a breakdown into June, a rally into August, and then it falls apart in August and September, makes an extremely big decline into October. Okay, so the timing in each case is very similar. It's only how high will the August high be? Will the June high be higher than the August high? And as it develops, you can tell. You can pretty much read the strength of the market in relationship to these cycles. And if the bearish version, which is the kind of the 24 years ago pattern, it goes into the 911 event, that was a miserable time. that would be happening. You'll see the August high is a minor high, and the June high is higher, and then we start going down hard, which we'd expect anyway. We expect the break from September, we break from August into October anyway. All right? We're looking at a bear market starting next year, the long-term storyline, and going on into late next year or early 2027, and that is our story.